The Central Bank of Norway cut its interest rate by 25 basis points today. Joining me now on the line to discuss this is Terje Strom, Chief Analyst at Analyse in Oslo. So Terje, were you expecting this and what were the main reasons behind the move?
I think this time it was a very, very close call for the central bank. The experts in Norway expected both ways this time, but I think Mr. Olsen decided to be better safe than sorry, actually, this time, and be ahead of the trouble in the job market in Norway.
A 13% drop in the krone against the euro in the past year has pushed underlying inflation to 2.9% last month. When do you see inflation moving back towards the central bank's 2.5% target, and what are your growth projections for Norway this year?
I think that the inflation target in Norway, 2.5%, is a flexible inflation target that the central bank also said today at their meeting. So they could look like 1 to 3 years ahead on the target. And this time they said very directly that to stabilize the production and unemployment in Norway is very important, and in a time of changes and a lot of people moving from the oil sector to other export sectors, you need to have a low interest rate to help this transition from an oil economy to more broad export-based economy. So that's I think that the inflation is coming down again in 1 or 2 years because of the lower wage inflation. That's we have wage inflation in Norway now less than 3%, and in Norwegian terms that is low. It's normally at 4.5%. For my growth projections, it's 1 to 1.5% GDP growth both this year and next year. It's the best estimate I have.
The level of unemployment rose by 2,500 people in July. Are you expecting a pickup in employment in 2016?
The unemployment has risen fast in Norway, but yesterday we got a positive message. So then the unemployment rate fell back down from 4.5% in August to 4.3% for September on a 3-month estimate. So the unemployment is a problem, but it's not really a crisis situation yet. But of course, it's the expectation is that it's going to be worse because people have to move from the western coast where the oil industry have a lot of jobs that are disappearing over to other industries and also municipalities. So you have a transition period, and that is going to keep the unemployment rising for the next year or so. But then one thinks that it's going to get better, and I think I agree because of the fiscal budget, the national budget coming on the 7th of October. It will probably come with tax cuts and with also new projects on infrastructure and building. So that will keep the rising of the unemployment less than in the worst case.
And finally, what is your outlook for the krone next year?
We are in a very difficult situation guessing about the krone because it's normally about the prognosis or forecast for the oil price, of course. So if we have oil prices that comes up to $60-70, of course, there's a good possibility that the krone could be stronger. But I mean, the move of the interest rate down to 0.75% is the historical low in Norway, and it also means that, in my opinion, that the central bank want to keep the krona weak to help the traditional exports industry in this time of transition from the oil-dependent economy.
Well, thank you very much, Terje, for sharing your insight with us. That is all for now. Goodbye.